AMA with Emily and I for our premium subscribers. So don't forget, you can support us at breakingpoints.com. You can participate in these live AMAs and more, and also see Emily every Friday on the Emily Show, or on the Friday Show. Sorry, I guess we can call it.
We should call it.
Should we call it the Emily Show? Yeah, I like it. I like it. All right, don't forget. If you can't support us right now and all of the new expansions that we're doing here, it's totally fine. Just make sure that you like and subscribe to this video. And if you're listening to us on a podcast, just go ahead, give us a 5-star review, and send the episode to a friend. That is the single best thing that you can do for us. You can even pick your favorite episode. Emily, you know, what's fascinating in our podcast downloads is that there are hundreds of thousands of people who listen to these like at the end of the week. Like they don't listen to them daily. We have a huge spike in Fridays and Saturdays. I'll be honest, I don't get it, but I guess it kind of makes sense.
Is there
like catching up on the news
in any particular episode? Like is it Monday?
No, yeah, like the Monday episode will boom on like a Friday. I'm like, I don't get it. I mean, YouTube is much more like regular, you know, like after 48 hours or so, like most of the people who've watched something are going to watch it. There are a few evergreen topics, but yeah, these podcast listeners, man, I've been trying to understand these people for 4 years. I'll never get it, but it's okay.
That's
we love
super
you anyways.
interesting.
Yeah, we love you anyway.
All right, so if you're listening to this on Friday.
4 days from now, if you're listening to this 4 or 5 days from now, go ahead and follow your instructions, okay?
Yes.
All right, let's get to the tariffs. So, massive sell-off in the stock market yesterday. Not one particular thing that seems to have set things off, but just still real signs of danger. Here's CNBC right around the close. Let's take a listen.
Look at the markets, which are very unwelcome on this Monday afternoon. The Dow is down 1,270 points right now, so we're at session lows. And if we close here, it will be the 11th 1,000-point drop in the Dow's history, and it's the 4th this month. Now, the S&P broad market, here's what you need to know. Down 3% and down 16% from the 52-week high. We're about 200 points above the intraday low of 49.10 on April 8th. Keep these in mind as people look for a retest, and is that an entry point? The NASDAQ is the worst of the major averages, led lower by NVIDIA and Tesla. Tesla down 7% ahead of its earnings tomorrow. And of course, check the yield on the 10-year, because unlike most previous stock sell-offs, where you at least get some cushion here, nope, not getting it today, 440. This time treasuries are being sold as investors sell stocks as well. Dollars down, yields are higher.
Yeah, and actually the yield has spiked even more since then. We're going to get to that in a little bit. But let's go ahead and put this up there on the screen. The Dow is currently headed for the worst April since 1932, as investors are sending no confidence signals. Quote, few think the administration's negotiation with trade partners will yield results soon enough to ease the strain. And Emily, that really seems to be a big thing that was dawned on the market yesterday, and a lot of these investors, is the fact that the Japanese talks went so badly, and that the Japanese prime minister and their team left Washington with no deal. And then, honestly, the worst signal was not just them leaving. It was the Japanese prime minister going to parliament and declaring, we will not concede to all of the demands of the United States. They are actively counter-signaling the Trump administration at home, and by the way, to great popularity, actually. The Japanese people not very happy about the way that they have been treated throughout this process. There's been ongoing talks there with China and with South Korea, something, you know, Trump historically has made 3 countries which absolutely hate each other's guts to at least move in some solid direction as a result of the tariffs. And so I think as this begins to dawn on the investors and on the market, they're seeing that Japan, which was supposed to be the check mark, like that was supposed to be the easiest one to be done. And they're like, holy, we have 70 more of these trade deals that are supposed to happen in 90 days. They're like, this is just not going to happen. Like, this is not reality. And then no signal yet from the Trump administration around any sort of cave. The more that starts to set in, I mean, you know, everybody celebrated that stock market bump after the 90-day pause. We are just a few, maybe 2-3% or something like that away from being right back to where we started, even before the 90-day pause where they initially wanted. The bonds, obviously, we'll get to in a little bit, but this is not a good sign.
Yeah, I mean, this is maybe the worst sign, because
I would say it's the worst sign.
There's a counterfactual here where Trump actually is signing and inking all of these like really good deals, and that sounds a little bit ridiculous, but it's possible, right, that he could be coming away from this with actually some significant progress in these negotiations with Japan, with places like Vietnam. It's entirely like within the realm of possibility, but it's also the predicate for his entire strategy.
Yes.
His strategy hinges on being able to seal these deals, to seal them quickly, and to get good ones. And again, I think it's more likely than not. It's always been more likely than not that wouldn't happen. But it was always a possibility.
Look, it was theoretically
always a possibility.
possible.
Right.
What's interesting, too, is Charles Gasparino over at Fox Business just said today, quote, about 10 days ago, Scott Bessent was telling Wall Street executives that he was making progress cutting trade deals with India, Japan, South Korea, and Australia, some of the largest trading partners, quote, then nothing happened and the markets tanked. So there's been a combination of a couple of factors. It's not only the lack of trade deals, there's also been Trump's escalating attacks on the Federal Reserve Chairman, Jerome Powell.
Yep.
And look, I mean, I don't think Trump is empirically incorrect that we do need a rate cut, but it's really more about the signal that he himself would take like some of unitary executive power over the central bank, which would mean that there would be an escalating fight and, most importantly, uncertainty. So it's not the fact that investors don't want a rate cut. They would be absolutely happy to do so. As we've already seen, the European Central Bank has cut rates. There's been numerous other countries that have done so as well. The dollar right now, by the way, is a disaster. The dollar is down to, I believe, almost every currency except for the Turkish lira. All-time highs, or not all-time highs, but near all-time highs with the euro, the Japanese yen, and a few other currencies, which traditionally actually were quite down. This is very difficult because even without tariffs, that means that these foreign goods are going to be more expensive for United States investors and importers that are able to afford this. That is not to even mention, the other stuff that's happening right now in the markets. Let's put A2, please, up on the screen, because this really actually underscores a lot of what I'm talking about here about the dollar weakness. Quote, Trump trade offensive threatens America's financial primacy. And the rising volatility and the dollar weakness is raising fears for a financial realignment away from U.S. shores. And so this is the big fear right now, but the move away from the United States dollar as a reserve currency. Traditionally, as they were talking about on CNBC, you see bond yields start to go down, which obviously has major pressure in terms of interest rates, the Federal Reserve, but we don't see that. And so really what we're seeing is both a fleeing from U.S. markets and from the U.S. dollar. And so when you have massive uncertainty on those two things, as well as this massive pressure in the bond markets, you basically have financial uncertainty and pressure at all levels, at the consumer level, at the equities level, at the bond level, and now at a currency level. In fact, I was just reading today that one of the largest foreign exchange of traders, like of currencies, has been margin called and has to basically halt like all trading. And so there's, look, I'm not shedding tears here for Forex traders. It's like, oh, boo-hoo. But it's a signal, obviously, that the uncertainty and the basically shock to the overall dollar is causing fundamental questions to be asked across the world. And I think it always just returns to why. It's like, if that's a result of a war, if that's a result of outside pressure, if that's a result of a hyper-intentional policy for de-dollarization across the world to make U.S. goods more competitive, for genuinely good trade deals, a lot of people will be fine with that.
Exactly.
Right? Yeah. But the point is that within this vacuum of chaos, where there seems to be no policy agenda, everything is basically at the whims of whether Peter Navarro is on the right building in the White House complex or not. That's when everybody is just like, yeah, I'm done. I'm hoarding cash if you're lucky enough to have some, taking out debt, or if you're a company, I'm buying nothing for the next 90 days. And, the freight drop that's coming from China, it just still has not set in for people because you're not ready for the price increase at Costco. You're not ready to go there and to see stuff that you normally would that's just not on the shelf. It takes a couple of months to see that happen. I mean, don't forget, the peak of inflation in the COVID era was 2022. Even though 2021 was marked by all of those increases, it was really after the invasion of Russia where we saw massive shock to the financial system, massive shock to the energy market, and basically a year of unchecked inflation that the government allowed to basically just happen, where all of those things culminated, where people were like, I am done with Joe Biden, and I'm really done with the overall U.S. economy, and they really never forgave him for that. And I think that they're really on track.
You know this as well as I do, but a lot of people in the White House right now specifically are looking back to 1981.
Yeah.
And they say Ronald Reagan weathered a temporary recession. The short-term pain paid off for him.
Yeah.
He was able to, muster he was able to mobilize voters and have a very successful return to the presidency. This is very different from that in a couple of different ways, but just one important way that you alluded to, it's not about price.